Hey everyone, this is James, and this is March 11th, about 9:30 a.m. Eastern Standard Time. This is my 4-hour chart of Bitcoin. This is BTC USDT, and this is on the Binance exchange. If you want to know where the numbers are coming from, that's exactly where they are coming from. Now you're going to see these counts. These counts are only used for illustrative purposes. All right, so we'll just get that out of the way. First of all, this video is not investment advice. Second of all, I like to go over the overall trend of where we've come from, and what you can see is that we've been in a downtrend since last year. We broke out of that downtrend, and now we're kind of retesting that downtrend area. I've also talked about how muted this portion of the market is and how volatile price used to be and how like red hot the market used to be. So we've had some changes in the crypto market for a while now. Let me remove all these little small lines. Sorry about that. These should not be there at all. So what I wanted to talk about was the similarities. Okay, I started saying about red flags yesterday in my video. I wasn't trying to like create fear, but I was just saying that something is wrong here. And I was trying to find the little Guppy rally, and I think that was it. That this little 3 to 4 area, that's it for the Guppy rally. If the only reason that's going to change is if we continuously set higher lows and higher highs going forward. But I highly doubt it, because the similarities are, I mean, these are literally like identical twins here. All right, this move right here, let me show you. This move right here happened on a Saturday night, Sunday morning. This reversal move right here, this 3 to 4 before the downside to 5, same exact thing right here. You see the counter trend move? It creates a counter trend move that I have highlighted in a blue line. They literally are identical. As I zoom in, you can see this. All right, so let's look at this one real fast, and then we'll go to the other one, and then that way everyone can visualize it. All right, so this count is only for illustrative purposes. So I swear, if someone starts freaking out about it, I'm gonna like go nuts, because I told everybody, you know, it's just for illustrative purposes. But you see, anyways, so we have the 1 to 2, we have the 3 to 4. All right, now let me show you this too. Even with the Fibonacci retracement, you can still see it. It's a 618 from the 2 to 4. And this retracement, as long as we do not start blowing hot, like blowing out to the upside, your 2 to 4 is literally almost at a 6.8. As long as we continue pushing, we can still hit about 94.30, possibly break through it just a little bit. Push. What I think is going to happen is I think they're going to push the top, and by pushing the top, it'll just slightly break above the 94.80, so we could reach about the 9,500 level. I think that indicator will catch the guppies, the breakout buyers, and it will suck them in the same way they sucked people in right here. Okay, so like I said, there was going to be a relief rally. I've been talking about the relief rally. Anytime price goes vertical, price will typically relieve itself at some point. Okay, it's not guaranteed to happen immediately, but it will happen at some point. And it's not necessarily guaranteed every single time. Okay, so just understand that there's a high probability vertical price movement will be reversed. You can see all the vertical price movement that we left behind. You can see how long it took. It took, in this case, weeks. All right, so yeah, it's a real long time, right? You'd be old by that time. But you can see, you know, it took weeks for price to fully recover that vertical movement. You know, we could hit this 5 area. We could hit, you know, in the 7,000s and retrace eventually, maybe in weeks, maybe in months. It just depends. This market's getting smoother and smoother as time progresses. So the volatility is kind of weeding itself out. If for some reason this area where this 5 indicator is, if this area goes further than the 6,000, things are going to dramatically change, and the similarities are obviously going to fall apart as we take out that low, if we do. Okay, so even in my prior video, I said I still did not believe we were going to take out that low. I said we would take out that low if these buyers in this area are not there anymore. Right? If there's nobody to catch this, those buyers are not there, and then price reaches this 6,000 low, and there's nobody there to immediately turn this thing around, then this ship will just continue sinking. All right. Does not mean it's the end of the market necessarily. It just means we put in a lower low. That's all it means. All right. So we'd have to take it, you know, day after day as time progresses and see what happens. Now, some other things too that strike me very, very odd on here is that we can see the exhaustion of the actual reversal bar, right? This is a shallow market. I keep saying that the weekends are very, very shallow markets, and it is easy to push price around, and anybody with a big position can easily manipulate the price to their favor, get all the little guppies jumping in, and then guess what? Bye bye guppies, because I'm going to dump a big portion of what I have into you, and you're going to ride it down like a bobsled. So, and that's exactly what I think is going to happen. I think we're going to get the little tidal wave, and boom, and everyone's going to get washed out. And there's going to be a lot of bag holders that bought here thinking they were going to get rich quick, or whatever. Like, they're trying to set up a long-term position, and they're going to get washed out. So this is what I'm inclined to believe, because there are extreme similarities to this prior down run, okay, that we have here. I mean, extreme, like it's uncanny on how, like, they resemble each other, and you can see this. Okay, so it's just it's a tough market. I could be wrong. I could absolutely be wrong. All right, I'm not some like deity of like crypto trading or anything like that. I've been doing this for a long time, not in the crypto world necessarily. I only started doing this like earlier this year, just covering the charts and price action. I've helped a lot of people avoid some really bad decisions, and I just kept pushing the videos out there because a lot of people were giving me positive feedback, so I just kept doing it. I trade the stock market, I trade commodities, and I've been saying this entire time too. If you've been following me, the stock market is the easy money. Look at what the stock market's doing. Like, you can literally just put the money in there and go to sleep, and in 6 months, it's going to be probably more than likely worth a lot, because we have a non-stop printing press. All right, and you can obviously see that the United States, we just keep printing money, and that's how we solve our problems. And I guess in theory it works, and it could work for who knows how long, who knows when the clock ticks for that one. But anyways, back to Bitcoin. There's a lot of red flags going off here, okay? And I just want to share these similarities to people, because I know there are people trying to accumulate long-term positions. And I do think that we could potentially have one more wave down, and at that time, like I said, it's not investment advice, but you can do what you want with your money. And I think that there is more downside, especially since this bar could not even break above in one shot, okay? This is a 4-hour time span, all right? This is a very, very big time span. So let me walk you through these bars, all right? This is going to be a longer video, so you either got to put me on 2-speed, or you just got to hang on, because I have to walk through these so that way people understand where I'm logically coming from on this. All right, right here we can see. Let me change my marker color real quick to a nice blue, and that's the biggest thickness. Okay, we hit this area, and then you can see these bars, right? Let me just zoom in a little more. That way everybody, because I know people watch it on their mobiles. There we go. Okay. Right here, you can see how this bar just dumps through and then continues its run downward, right? You can see how these bars just kind of shimmy their way up there, consolidate along this line, right? My line sets are based on frequency, and frequency shows where price exhaustion can occur, okay? And it can also show where price strength occurs. And price strength for sellers occurred right here. You can see that, okay? Imagine this is the goal line. If you just hobble to the goal line and fall over, is everybody going to think that's a convincing win? They're going to think, no, they're going to think you're about to die, probably call you an ambulance. But if you burst through that goal line with conviction and your arms up screaming, and you keep running another mile, and everyone's like, hey, stop, 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 and you keep running, then that's conviction, all right? That's strength. It shows that you finished very strong. But if you just, hobble and collapse over, then it doesn't show strength. And that's essentially what we've done here. We hit this price point, then we've had a second bar that had to be pushed through. So this is like you reached the finish line, but you couldn't quite break it, so you kind of bounced back, and your coach had to run out there and push you through. And that is a red flag. That is also also means that there could be a large possibility we could have a reversal from this point, because price could not cross through the finish line with conviction. It had to be pushed by its coach. And that's exactly what I see on this chart. Now, at any time, I could be wrong. If we start setting a higher high, which is above about 9,500 on the Binance, all right, so I would want to see price not only break the 9,500 range, but it would have to trade successfully thereafter above the 9,500 range, okay, to avoid the breakout buyer trap, which is going to occur right in that area. And that's why I have that 4 there. Then obviously my tone is going to change. And like I've said in my previous video, I'd rather buy higher than buy low and hope I hit the bottom. Okay, because listen, 5% on an asset that's 60,000 is the same as 5% on an asset that is $6. 5% is 5% at the end of the day. Everybody has to get the lowest low. I got to get in the lowest low so I can brag to everybody about it. It's not about that, okay? It's not about that. Never once in my entire professional career of learning, being an investment advisor or learning from some of the top traders in the world have I ever heard that come out of anyone's mouth. Just jump in. Just jump in and hope, It's always been wait for the trend to change. The trend has not changed yet. We are still in a negative downslope, and price is still reacting to this negative downslope. You can clearly see it right here on these 2 bars. Whether you want to use candles or bars, it does not matter. You can clearly see the oscillation around the negative downtrend. The green line is only there for illustrative purposes. Okay, I highly doubt this is going to hold up. This is way too far in the game for this bounce to really have any strength, and that's why you see it hitting this finish line right here, and then coach has to run out and be like, you got to get through, and coach is pushing them, but this individual just wants to roll back downward. So we'll see what happens, but like I said, there are some extreme similarities to the downslide we had back here in the 6,000 range. So if you're still hanging on, like I said, it's going to be a long video because I want to kind of analyze this a little bit deeper so people understand the reason why I'm saying this. Now, here at this time, this was not the center line, this gray line right here, okay? This was not even a frequency line of this price movement. Oh, no, wait, no, I'm sorry about that. I thought I had my lines moved. It was at that time. But you can see this time, price used it as an oscillation, right? Like price oscillated around this line just a little bit. We actually broke it with some conviction, but then you can see what happened on the preceding bar right here. Let me zoom in, sorry. So I just got to make sure everybody can see it on their mobile. Right here, you can see how it could not even finish on its top, and it pushed back down. That is a sign of weakness. Thereafter, we could not break a newer high. We did, however, break this prior high on this little tiny run, and I can tell you that breakout buyers probably got all hopped up and ready that, oh, look at that, it's the first higher low, and it's the first higher high. That's it. Jump in. And look what happened. Kaboom. They got washed out and sucked into the undertow of the ocean. And the whales just, the whales had their fun. So this is what I think is going to happen here. You can see the spacing, the distance. It's very weak. Like I said, the only reason I'm going to change my mind is if we start making higher highs and higher lows, and it cannot be just the first one. All right, it cannot be this first lower low and this first higher high, and then that's it. Like game on to go crazy, because I have a inclination. My intuition is saying this is a red flag. There's something seriously wrong, and there is a higher probability for more downside. And that's what I think is going to happen. So we'll see what happens, but this is my analysis for today. It's March 11th. I know it's a long analysis, but I'm telling you there are some striking features of these moves, and they literally look identical. And it just, all I can say here is that this was the high. This is the weak reaction, and obviously you can see what happened after the weak reaction. and the similarities between, oh, sorry about that, similarities between this area right here and this area are just like mind-blowing, especially since the reversal right here occurred on Saturday night into Sunday, early Sunday morning right here. I mean, like, what's the chances of that, you know? Like, what's the chances of that? And you can see like it literally looks identical when you look at them. I mean, identical. This is like this is the mama, this is the baby right here. And it does not mean that necessarily it has to reach this area where I put this 5, okay? This 5 is only there as a visual representation. We can stop somewhere in the mid-7s, it's fine. I do think that we do create the higher low, and then we create that nice long-term structure for the market as long as we do not break the 6,000 low. If we do, that's a whole nother story, and we're basically going down a waterfall on a canoe and off a 50-foot ledge, and it's not going to be a fun drop. So we'll see what happens, but that's it for today. I will do another video in the evening. I am not expecting this run to go much further. All right, like I said, this individual is trying to break through the finish line, and coach is out there trying to push them, and they're fighting coach, and they're exhausted, and it's just not looking good. So if we do roll over, it's going to be brutal. It should be fairly rapid. It should probably be about a day to 2-day movement, and it will destroy the guppies, and that's why my other video was called the Guppy Destroyer, because it's coming in and it is going to destroy some guppies very quickly if this pans out the way that I think it's going to pan out. So that's it for today. Some potential bounce areas could be around 8,300. We're going to possibly bounce to 7,700, but ultimately I think we do settle somewhere into the mid-7s as long as we continue the same exact pattern that we've had in the past, not even a month ago. So, or a little, yeah, about a month, a little more than a month, or yeah, about that. Anyway, so that's it for today. Everybody have a great day or great evening, depending on where you are in the world. If you do like the content, you do like the videos, subscribe, like, follow, comment, whatever. If you like it, let me know. I really appreciate the feedback. YouTube and like all those other various sources, everything's based on the likes, the comments, etc. For the algorithms, so then that way they can actually show your content. So it's very tough for content creators in this day and age, because it's like you have to have a celebrity status, otherwise you just sit in the dark like cave of these social media outlets, and that's where you remain until somebody comes in with a flashlight and pulls you out. But anyways, that's it. I hope everybody understands like where I'm coming from logically, understands the hesitation, understands my reasoning behind my analysis. It's not that I'm just trying to wildly say stuff to confuse people. Something is definitely striking me wrong, and I've been doing this for over like almost 9 years now, and it just there's just things that you just know, like as a trader, that typically when red flags start going off, you have to listen to yourself. And you may be wrong, but it does not matter. You have to listen to that when those red flags start going off in your head. You have to take a step back. You have to analyze it, and that goes with anything in life. The moment something starts shooting red flags up, you got to step back and take a bigger picture approach, or just really analyze it, and maybe just miss out on the opportunity because it's yourself, it's your higher self telling you that there is something wrong. So, and here comes I don't know if you could hear my son, he's running through the house screaming. But anyways, this 18-minute video, so I'm going to cut it off right here, and I will talk to everybody later.